funsupermart.com.
Hello everyone, welcome to FSM Webcast. Joining us today is Stear to share with us his outlook for Asian markets in 2013. Hello Guy, thanks for joining us. In general, where do you see Asian markets going in 2013? And can you name some of the main catalysts?
Well, I think for many investors, 2013 will seem a little bit like a repeat of 2012 because we'll still have three big issues to face. First of all, the Chinese economy. Secondly, the European crisis. And third, the US debt situation, and particularly the fiscal cliff. But our view generally in 2013 is that pretty optimistic on equities. We think equity markets will perform reasonably well. We think particularly the US market will perform well in the first half, and Chinese equities will be pulled higher by the US in the first half as growth actually impresses on the upside. And in the second half of the year, it'll be more a phenomenon of the European story with some good news in terms of the European sovereign crisis and movements towards fiscal union and a real durable solution to the problems that Europe's faced over the last 3 to 4 years.
Are you more positive on equities relative to fixed income next year?
Yes, I would say this 2013 will definitely be a year for outperformance of the equity markets relative to fixed income. Fixed income is, of course, at multi-year lows, and our belief is that as growth begins to improve, particularly towards the second half of 2013, we'll tend to see bond yields moving higher, so that will depress fixed income. Within fixed income, we prefer credit markets to governments. We think spreads can tighten a little bit in the first half of 2013. It'll probably be fairly flat or maybe mildly wider over the second half of 2013. But I'd say equities 1, credit 2, and government bonds a distant third.
Which markets or sectors will take the lead in 2013?
Well, particularly in terms of the Chinese market, I think that what the markets are anticipating right now is a good performance for consumer cyclical stocks. I'm afraid I think there will be good news for consumer cyclicals, but a lot of that is already in the price. So I would tend to be looking for sectors which haven't performed that well yet, which can still benefit from a lift, like the telecom sector, for example, in China.
Which markets or sectors will you avoid in 2013?
I think there are two that I would be more cautious on. The first would be the banking sector, where I have a tendency to feel that most people are underestimating the risk of non-performing loans. We think that non-performing loans will pick up fairly sharply in 2013, and the banking sector will underperform as a result. And I think the second sector you might want to avoid is raw materials. They've done very well in the past 3 to 4 months. That's in anticipation of a lot more infrastructure spending. Given the fact that the economy is doing reasonably well without too much infrastructure spending right now, the government probably won't feel the need to accelerate infrastructure spending, and I think raw materials as a result could correct lower.
And what's your outlook for Asian currency movements?
Well, I think it's going to be an interesting year for Asian currencies. I think the most interesting movement may be in the yen. If you think back since 2000, we've really had two big trends in the yen. The first has been a period of yen weakness between 2000 and 2007, and then a period of yen strength between 2007 and the middle of 2012. We believe we're now going to start a new trend, which will be a renewed period of yen weakness. That could take the yen against the dollar to around 86 this year, but the bigger issue to think about is where we'll be in the yen over the next 3, 4, 5 years. We could easily see the yen moving back to 100 against the dollar. So this will be a significant year in terms of the medium-term trend in the yen. The second interesting currency move will be in the Korean won. The Korean won has actually been quite weak over the past 3 to 4 years. We think this is the year that turns around. Again, this could be the beginning of a 3 to 4 year cycle for the Korean won, which can see it move significantly higher against the dollar, somewhere in the order of 10% or even 15% over the next few years. And then finally, the Australian dollar. We're not really in a medium-term trend for the Australian dollar, but in the short term, we think the Australian dollar can do well for 2 reasons. First, because Chinese economic growth will probably be a little bit stronger than people expect, and that does tend to support the Australian dollar. And secondly, Australian interest rates probably won't be cut as much as the market is currently looking for, and so as a result, the Australian dollar will be supported as well.
So last but not the least, what's your advice for retail investors in terms of asset allocation next year?
Well, I think that retail investors should be courageous in 2013, and I think being courageous means 2 things. First of all, I think they need to be overweight equity markets. because I think equities will be good performers in 2013. I think secondly, probably a lot of retail investors, particularly in Asia, have been very defensive about Europe. Europe has enjoyed a very good performance in the last 6 months, but our belief is that it's definitely not over. We may have a bit of a slow start to 2013 for European equity markets because we have important elections in Italy and particularly in Germany in September. But as we approach the second half of the year, European equities could again be very strong performers. So I think in terms of asset allocation, you need to be long equities and you need to be prepared to rotate into Europe in the second half of the year. The final thing, if I can say it, is you should try and separate the underlying asset call from your currency call. So there are different things which are going to happen in currencies relative to underlying markets. Be long equities overall, but if you can combine that with a sort of currency overlay to be underweight yen, for example, or overweight Korean won, that's an interesting opportunity.